for this is the February March 2025 paper for the accounting MCQs. And so students need to understand they will be given 1 hour 15 minutes for the paper, and you will have 35 MCQs to be answered. So there will be 35 MCQs. Each MCQ is worth 1 mark, and we have to answer all the questions. The rough working can be done. Any rough working should be done on the paper. The total marks are 35. 1 hour 15 minutes are available to solve it, and you will be given a grid sheet. I'll share the grid sheet as well too, so that you can have an idea. And you have to use it with the pencil and do that. Okay, so these are the instructions. Very simple instructions. The best way of doing MCQs is you go with the starting one, and whatever you are able to do first 30 minutes you should do those MCQs that are very quick to do, and you can easily score marks in that. So let's try to understand what should be the technique for solving MCQs and what different methods of solving MCQs can be there. So as always, the examiner always starts with the bookkeeping and the accountant different definition or differences. Section number one MCQs, then section number 2, 3, 4, 5, 6, and 7. That's how the examiner will test. MCQ number one says a business employs a bookkeeper and an accountant. So a business is employing a bookkeeper and an accountant, and we basically have to do that. A business employs a bookkeeper and an accountant, and which task does the accountant will perform? Okay, which will task will be the accountant is going to perform, and that is going to be that the accountant is going to perform the task of making the accountant makes the income statement, balance sheet, and accountant does the comparison, ratio analysis, on all these things. So students need to understand recording the sales and purchase invoices in the books of prime entry, making a journal entry, and extracting balances. All of these are basically part of the bookkeeper's job. Okay, all of them are part of bookkeeper's job. The accountant will do a monthly report that will do, as I said, the accountant will look at the comparison analysis part of whatever information is available. He will calculate the ratios, will find out profitability, and all those things the accountant will do. The answer for question number one is Sir C, which is basically preparing a monthly sales report that analyzes the profitability of a company. Does everyone got this clear? Understood? Any question? It's better to ask any MCQ that is not clear, ask right away at that point. If you do forward and you go back with the previous MCQ, it will be difficult. So question number one answer will be C. Then a transaction has been done. So a transaction has the following effects: assets decreases, liabilities also are decreasing, and capital will be increasing. The business is not overdrawn at the bank. So the business is basically the bank, there is no bank overdraft. The examiner is trying to tell you, the examiner is trying to tell us students that there is no bank overdraft. So which transaction has happened? All these one and two, MCQ number one and two, you have to read all of the possibilities, all of the transactions, all of the options have to be read. A payment was made to a supplier after taking a cash discount. So I don't think a payment was made to a supplier after taking a cash discount. So when you are giving a when you are taking after receiving, so you received a discount received. Discount received definitely increases the income. Discount received is an income. You made a payment. A transaction was made, so we made a payment to the supplier, and we got some discount. So discount received is an income. Income always increases the capital, sir. So income will always increase the capital, and because we made payments to a supplier, so our bank got decreased. Payment is always made the bank, so bank also got decreased, and liabilities, a supplier is decreasing as well. So this is the point number A will be the answer. Although I will read it the further questions as well, but point number A will be the answer for this one. Okay. So option number A should be the answer. A payment was made to a supplier after taking a cash discount. Okay. So why the others are not possible? Let's have a look at them as well, since we are discussing in detail. Goods were sold to a credit customer for more than their cost price. So if the goods were sold to a customer, So the assets would have increased as well, and assets would have increased. Okay, if the goods were sold to a customer, so assets would have been increased, and that is not happening here. Goods were sold to a customer for less than their cost price. So if you are selling for a less than cost price, it means a loss. If you are selling for loss, so loss will definitely decrease capital. So that is not possible. If you are selling the goods at a lower price, students, hope everyone understood. If we are selling for a lower price, it means that we are going to make a loss, and a payment was received. So the payment was received, which means that our assets should increase because a payment was received. So bank should go up, but the bank is decreasing. The assets are decreasing. The assets are not increasing up. That is question number two done. Okay. Hope everyone got it. So all of them are the opposite. The double entry system of bookkeeping consists of the double entry system of bookkeeping. It's consists of processing accounting data in a certain order. So we have to understand what is the correct order of the accounting cycle. Basically, they want to know that does the student know what is the accounting cycle. So you always start with business documents, correct? Then you do go on to books of prime entries and then ledgers and then trial balances. So option number A will be correct, sir. That will be 3A again, because you have to start with business documents available in the notes as well. We always have to talk about business documents first, and then we go on to books of prime entry, and then we have to talk about the ledgers and the trial balance. Okay. So that is basically the correct order. Okay. Understanding, students, that this is going to be the correct order, which is basically business documents, books of prime entry, ledgers, and trial balance. Then four is basically question number four. We go on. Imran made an entry. So there's a person named Imran, MCQ number four. Imran made an entry on the debit side of the cash book. As soon as you read this, your mind should say if something is coming on the debit side of the cash book, is the money being received in the bank column? It's the receipt coming in. It's the receipt coming in because Imran made an entry debit side. So what could the corresponding, okay, so they're asking what could the corresponding credit entry represent? What could the corresponding credit entry represent? So bank was debited, and the credit entry can be a decrease in cash, not possible. A decrease, if the decrease in trade payables comes in with, if the trade payable is a liability, sir, so if liability decreases on the debit side, liability to always goes on the debit side, right, students? A decrease in cash should be going on the, a decrease in cash, yeah, decrease in cash, because cash is an asset, sir. I'll go like this. A cash is an asset, sir. And if asset is decreasing, it will go on the credit side. Okay. If the cash, which is an asset, if asset decrease, it goes on the credit side. A decrease in trade payable is a liability. Liability may decrease hoga, it goes on debit side. Increase in non-current asset will go on the debit side because it's an asset, sir. An increase in a trade receivable is the same, it will go on debit because it's an asset. So everything is going on the debit side. As you can see, everything is going on the debit side except for the odd one out. You pick the odd one out. So this is also question number four. Answer is A, sir, because a decrease in cash means that the cash is decreasing. You can put that on the credit side. We also call it contra entry. If you can recall it, there is adjustments, there are transactions in the cash book. There are certain transactions in the cash book that paid money for the business use, took money out of the cash from, took money out of the bank and paid in the cash, or took money out of the cash and paid in bank for business use. So we can call that very simply as a decrease in cash will be will be a reduction in the asset. An asset, when it reduces, goes on the credit side. All the other of them, sir, increase in non-current asset, increase in a trade receivable, all of them is an increase in non-current asset. And a liability is also there, but the liability is being decreased. So the liability, when it decreases, goes on the debit side as well. So all of them were going on the debit side. Hope everyone got it. Question number four is an A answer. We have got the first page done. Hope everyone understood and got this right. So moving forward, we have got that Dave supplies goods to Peter on the credit. So we have got Dave supplies goods to Peter on credit, and Peter owed Dave $440 during the month of April. Dave processed the following documents. Okay, so that's one a very good a ledger T account question we have got, sir. we have got a ledger question. Okay, Dave is supplying goods to Peter on credit, and Peter owed Dave $440. So Peter owes Dave $440. If Peter is owing Dave, so Peter have to pay Dave. So Peter basically means Peter is a Dave have to receive it. We have to understand from the perspective of Dave what was the closing balance on the statement of account that will be issued by the Dave to Peter on 30th April. Okay, at the end of the month, what will be the statement of account that will be issued by the Dave to the Peter? Because at the start of the month, 440 already Peter wrote. So he might have got Dave processed the following documents. Might have got more goods. So we have to use the calculator first time for this one, the first calculator based question. There can be theory as well as numerics being tested, so we have to be careful here, students. So 440 opening amount plus 360 for the invoice received after Peter. So 429 was discount also subtracted, and purchase return goods also subtracted. So I got the amount as the goods returned also subtracted. So it will be the $310. That's the closing balance that we have to show to the that will they will issue the closing balance which Peter still have to pay. Okay, Peter still owes. How do I got this? Students need to understand 440 plus 360, the further goods that were issued minus the payments, 429 already paid, $11 discount, and then some goods were returned. So 440 plus 360 minus 429, minus 11 and minus 50 will be giving us 310. That is the closing balance of the statement of account that will be issued by Dave to Peter. Okay. I hope everyone understands. The only thing that have to be ignored is the double time of one, as we know, as we have read it in the books of prime entry, that there will be a purchaser issuing as well, and a seller will be issuing as well, receiving the debit and credit note. It's used for the returning of the goods, so we have to consider them as one time only, not the double time. Okay. Next, we have got is basically question number 6. That is, we have got Alicia entered the credit note. Alicia entered the credit note she received in March in the correct returns journal. How was the total of the journal recorded in the ledger at the end of the March? How was the total of the journal recorded in the ledger at the end of the March? So if you have received a credit note, if always remember, we have to think from the perspective of Alicia, that sir, we are Alicia, and Alicia received a credit note. It means that she is the supplier of the goods and she have received a credit note. So she will have to credit the purchase return account because it's a return. It's definitely returns. Okay, it will be she will have to the total of the journal. The returns are always it will be a okay the purchase. This is a direct transaction understanding that you should know about credit notes. So this paper talks about a lot on credit notes. That's a good thing that the concept should be strong. We have got the credit note definition. A credit note is always returning of the goods. So Alicia, since she have received that credit note, she is going to credit the purchases return account. Okay, she is going to credit the purchase return account. Okay. Then we have got another question. Question number 7 talks about student that we have got which statement about trade discounts are correct. As you can see, some questions I am skipping the values. See, question number 5, there is no point in discussing the other values. It's the calculation question. Question number 6 is about the accounting basics, okay, which will be debit or which will be credit. So there is no point of reading the other question statements as well from that perspective. What we have is basically, okay, sir, which statements about trade discounts are correct? So we have to understand, okay, which statements about the trade discounts are correct. So you have to think from the perspective of, okay, what will be the statements that are correct about the trade discounts. So trade discounts, we need to understand, students, is basically it is used to encourage bulk buying. So this one we have to read all of them. Yes, definitely. Point number 4 is correct. Trade discounts reasoning is that it will be used to encourage bulk buying. So 2 and either C is the answer or D is the answer, guaranteed. Either C is the answer or D option is the answer because it is used to encourage bulk buying. It is debited to the supplier's account, never. Trade discount, please write it down, the note, important tip. Trade discount is never recorded in the books of prime and trade, sorry, trade discount is never recorded in the accounting books. Trade discount, sir, is never recorded in the accounting books. That is what we have got. Okay, sir, trade discounts are never recorded in the accounting books. Okay, trade discounts never recorded in the accounting books. So that is what we need to understand. So option number one is ignored. Now left to two and three. So it will be, it is only given if the invoice is paid. No, no, no. It is only given. You should know the concept of it. It is only given if the invoice is paid within the period allowed by a supplier. Not that. That is basically cash discount. If you pay early, you get a cash discount. It is shown as the deduction from the price of the goods or invoice. Yes, that's the definition of it. You will deduct it. It is shown as the deduction from the price of the goods on an invoice, and that is the correct answer for that. Okay, we have to deduct trade discount from the list price. We always deduct trade discount from the list price, students. Hope everyone got it. So it will be option number three and four, which is coming, sir, in the option number D. So question number seven answer is three and four. Hope everyone got this and is cleared, students. Then we have got why is a trial balance prepared? Okay, then we have got why is a trial balance prepared? So we have to understand okay, why we have to prepare a trial balance. We have to prepare a trial balance because now comes the section number two or section number three. Okay, why is the trial balance prepared? We have to assist in the preparations. I think it should be here. Read all of the answers. Income statement and the balance sheet. That is what is basically income statement and the balance sheet. Okay, to control the cost of the business, that is also not possible. To evaluate the performance of the business, that is the work of the ratios. Okay, whichever question requires other options explanation I'm giving as well. This is the work of the ratios. To evaluate the performance of the business is the work of ratios. This is the final accounts, which is income statement and balance sheet. That is what is the objective. Eight, question number eight answer will be the B, which is to assist in the preparation of financial statements. Hope everyone got it and is and understanding clear is that okay. So we have got eight answer as B, to assist in the preparation of financial statements. Next, we have got question number nine, straightforward direct question. Which group of account balances would appear which group of account balances would appear in the credit column of a trial balance? Basic theoretical question examiner asking what will be the balances coming in the trial balance on the credit side. So credit side, you need to understand it. It's all about the revenues. It's all about revenues or liabilities. Okay, revenue and liabilities. So I think purchase return always comes on the credit side. Sales and capital will always be coming on the credit side. It was a straightforward question. All of the group, one of the value, one of the item in the group must be something on the debit side. So all of these is basically it will be, sir, option number nine as the D answer, which is basically sales, capital, and purchases. Capital always increase on credit, sales revenue always increase on credit, and purchase return always goes on the credit side. So it's option number D. I'll just mark out how do you have to ignore the answers or how you have to do the elimination process. Assets debited, drawings. Option number A is that if I change the question, debit side, that will be option number A answer because option number A, all of them comes on debit, assets, purchases, and drawings. Isme all three of them are assets. As I said, if I change the question to debit side, then it will be 9A will be the answer. Then in this one, the problem is the sales return. Sales return always goes on the debit side. This one, expenses is the problem. Expenses always goes on the debit side. Okay, so that is why A, B, and C are not possible. I have explained that as well, students. Okay, so this will be 90. You don't have to put the cross marks. You don't have to put tick marks. This is just for the explanation purpose. You will get a sheet which you have to fill with the pencil. We'll work on that as well. Okay. Let's focus on the learning first. Then we have got which error have been made. So errors and suspense accounts comes in. Which error has been made? The draft profit for the year is 17,000. His actual profit was 17,400. Calculators allowed. Let's do it. The difference is coming of $400. Okay. The difference is coming of $400, and the draft profit is coming 17,000 and the actual is 17,400, which means you have to, before reading A, B, C, D, this is very important. This is tricky as well, important. Before reading the A, B, C, D options, I would like to mention that we can tell the examiner that the actual profit is 400 coming less. The draft profit is 400 coming less. So profit for the year is understated currently. 400 is the profit for the year understated. So what if we look at the all the values? It will be, we have got, sir, a purchase invoice for 2,600 had been recorded in the purchase journal as 2,200. So if I recorded the purchases as less, I have recorded the purchases as less. So if I increase the purchases will be debited. If purchases is debited, so profit will still subtract. Okay, हमें the profit को increase करना है. That is not possible. The profit will decrease by 400. Your target should be, there must be one adjustment, sir, that will increase profit. Profit should increase by $400. You can make some up. Your understanding as well matters. You should make something from your own side as well. So this will help me in solving. The profit from 17,000, I have to make it to the actual 17,400. The profits, sir, I have to make from 17,000 to 17,400. So I need to increase by 400. Option number one is decreasing the profit by 400. Then a sales invoice had been recorded as 2,200. Yes. When I will increase, because sales is recorded less. Since the sales is recorded less by $400, when I will increase the sales, the profit will also increase. So it's option number B, 100%. But still, as I said, you don't do it like this. Read all C and D options as well. And then we give the final impact answer to the examiner, final MCQ answer as well. So as I can clearly see, it's the sales was recorded, sales were understated. So I increased the sales. So my profit for the year will be increased. My profit for the year also got increased by that amount of the sales. Okay. Then we have got, sir, discount allowed of 400 had been posted to the credit side of the discount allowed. So ये तो double error हो गया कि discount allowed should have been recorded by $400 on the debit, but they have recorded एक तो wrong side पे record कर दिया. So we'll have to use double amount. यहाँ तो amount का issue है. The amount is going to be $800. That will be wrong. Discount received, that's the same issue. Double amount से होगा. So there is the amount difference here. So that's why C and D will not be possible at all, sir, because both of them have the amounts issue as well here. The amount will be double. जहाँ पर भी increase करेंगे, wherever we are going to increase, students will be doubled amount. Okay, that will be not possible as well. Okay, moving forward, what we have got is basically, just give me a minute. So what we have is basically going to be, okay, we have got question number 11 to worked out now. So question number 11 says, Paul calculated his profit for the year to be $40,000. Okay. So just try 11 and 12. Okay. Question number 11 and 12, all of them are related to suspense and errors as well. So question number 10, starting from 10, 11, 12, all of them are basically on the errors and suspense accounts. So hope everyone got this and is following as well. Okay. So question number 11 tells us that we have got Paul calculated his profit for the year to be $40,000. So Paul calculated his profit to be $40,000 and then he discovered some falling errors. So some errors were discovered. That is basically the expenses included rates prepaid 1,000. So we have to subtract 600 were owed for the electricity had been omitted and sales return of 10,000 had not been recorded. So what was the correct profit for the year? Second calculation question coming in. So 40,000 prepaid. So the prepaid have to be subtracted from the expense. So if prepaid is subtracted, the expenses will reduce and profit will increase. So prepaid will always increase the profit. So 1,000 profit to be increased. Owing will be owing of the electricity. And if you have any accrued expenses, students, if you have any accrued expenses, they will always increase the expense and decrease the profit for the year. So 600 for profit for the year will be decreased. And since sales return was not recorded, if I start recording sales return will be on the debit side. So it means that the profit will be decreasing by the $10,000. Okay, profit was overstated by 10,000. So now 10,000 of the goods have been returned. So 40 plus 1, 40,000 plus 1,000 and minus 600 and minus 10,000. So that will be coming 30,400. That is another question done. Question number 11B, which is coming 30,400. Okay. It's sales return. The customer returned the goods. We have recorded extra sales. We subtract sales return is always subtracted from the revenue. Sales return is always subtracted from the revenue. Since we didn't subtracted the sales return, it means our profit is overstated. We have to reduce the profit by recording sales return. When we record customers returning the goods, our profit will decrease. Now, if someone is returning me the goods or I have to return them the goods, it means my profit will decrease. Understanding, that's why we have to decrease the profit for the year. Got the point clear? Understood? Any questions, any issues following? So 11 is B as well. And the question number 10 was also B, students. Okay. Moving on, we have got question number 12 here. Question number 12 says the total of Simon's trial balance did not agree. The total of the Simon's trial balance did not agree. And then he said that he opened a suspense account as well. So the Simon opened a suspense account. His balance did not agree. And we have to do, he then find out when he restored the imprest with $70. So he restored the petty cash book. He had recorded correctly in the petty cash book. He recorded correctly in the petty cash book, but had recorded on the wrong side of the main cash book. So main cash book में wrong side पे record कर दिया when he was restoring the petty cash book with $70. This was the only error. What was the opening entry in the suspense account? So it's just that I have to correct the error and get the opening difference. Okay, so it will be what was the opening entry. That was the only error. So I can clearly tell the mistake is that petty cash book is recorded correctly. We were restoring the petty cash book should have been debited. We have done that correct. And cash book should have been credited. But cash book was debited. So now I'm going to correct it. The cash book will be credited by $140 and suspense account will be debited by $140. That will correct the error, students. Okay. Please understand, cash book should have been credited by $70, but we recorded it cash book on the debit side by $70. So now I will have to double the amount. 70 will cancel the error, and for 70 for recording the transaction. I repeat my point again, students. Okay, $70 is for correct canceling the error and $70 to record the transaction because it was recorded on the wrong side. So suspense would have been debited by 140. So you can tell the examiner very main important thing. A lot of students will write down as 140 on the debit side. That is not the answer. The answer will be the examiner wants you to know what was the opening entry in the suspense account. The suspense account opening inventory would have been option number C, which is $140 on the credit side. It would have been $140 on the credit side. That would have been the opening entry on the credit side of the suspense account. Hope everyone got this and it's clear, people. So we have got 140 on the credit side. Suspense account opening balance would have been 140 on the credit side, and then we would have debited suspense 140 to balance it out. What this is a very confusing one. A lot of students struggle in this one, so I'm making it here because they already opened a suspense account. That is what the balance they are looking at. Students need to understand they are already looking at the opening balance of suspense account. So when you are making suspense account, there were already the difference on the trial balance was already there. Okay, the difference on trial balance $140 was already written down here. When you corrected the error, it closed down. When we corrected the error, that cash book will be credited by $140. So now it finishes the T account. So I got this first, and then I said that the difference will be on the opposite side of it because suspense will be debited when we correct the error. So 12 is C, Please revise this one. This is very important, students. MCQ number 12 is very important in recent times. They are testing again and again, and this is difficult as well. Okay. MCQ number 12 is very, very important. Okay. 11 also, but 12 is more important for suspense account and the errors. A lot of students get wronged it. A lot of students will put 12D. That's why I'm focusing more time on it, because a lot of people will do 12D as the answer. K140 is on because they will correct the error. So that is not the case here. You have to be careful. It will be the opening balance they are asking for. So that will be, sir, the opening balance will be that we have got the opening balance as the opening entry is the difference on the trial balance. And we have got this as, sir, $140 on the credit side. Moving forward to question number 13 is on the bank reconciliation. Jamal's, as I said, we are on section number 3. We are going section wise of the syllabus. Section number 1 and 2 tested, basics of accounting tested, and now we are on section number 3. So then it will be control accounts, bank statement, bank reconciliation. So Jamal's bank statement at first May, it showed a bank overdraft of $1460. So we got a bank overdraft of $1460. There were unpresented checks of 385 and uncredited deposits. You just have to do the balance as per bank reconciliation, and you have to get the what was the cash book balance. So if students remember the format from the theory book of mine, if you remember the format, that is easy. That if the balance as per bank overdraft is negative 1460, so we just have to do negative 1460. Then what would you if you have to go balance as per bank overdraft, students, what do you go about it? Anyone would like to volunteer? Anyone? What we go about it? Okay. So it will be we add uncredited checks when we go balance as per bank statement. We always add uncredited deposits and always subtract unpresented checks, students. So this will be giving us the value which is coming negative minus 1460 and plus 255 minus 385, that is 1590, which is coming negative. Okay, so if the balance as per cash book is negative, this is coming negative, students. So if 1590 is coming negative, from the cash book perspective is a negative balance. So it's basically overdraft balance. Cash balance as per bank balance as per cash book is overdraft, which is basically 1590 on the credit side will be an overdraft balance. We have got 13 answer as well. See, it was worth a calculation question. Then comes a theoretical question, very simple. They are testing control accounts as well. This was just about format, balance as per bank statement. I started and then I added uncredited checks and subtracted the unpresented checks, and I got to balance as per the cash book. Very simple, only one question they test on bank reconciliation, and we have got it 100% correct. Then you should remember the formats as well. Which items are included in a sales ledger control account? Which items will be there in a sales ledger control account? So very important. The items that will be there in the sales ledger control account will be what, students? We have got basically which items are included in a sales ledger control account. Never, it's written in the notes as well. Never goods that are sold by for cash are never recorded. Goods returned by credit suppliers, they will go in the, this is basically called purchases return. Okay, so it will never comes in sales ledger control account, right? If goods are being returned by credit suppliers, common sense. The examiner is trying to test your knowledge. Cash sales never recorded. Irrecoverable debts 100% recorded, students, as well as checks received from credit customers returned by the bank as dishonored. So 2 and 4 is the answer, and we have got option number D for that. 14D is the answer, which is 2 and 4. Does everyone got it? Option 14D is the answer, which is, sir, basically 2 and 4. Will got this clear and following, students? Any questions, any issues, anyone? So question number 14 is the D answer, which is basically, and I've got 10 MCQs. So total MCQs are basically 35. Moving forward, we have students. Question number 15, let's talk about it. Hope I'm audible, everyone can hear me. After preparing financial statements, John T discovered two errors. So we have got, sir, two errors now. John T discovered two errors has been made in his accounting records. Error number one is vehicle repair cost of $1,500 had been debited So capital revenue expenditure have been treated as a capital expenditure. Very common question, very highly important. Lot of students gets confused in this every time. Majority of the time it is wrong. Okay. So what we have got is basically the vehicle repair cost. We have got vehicle repair cost of $1,500. So that is a revenue expenditure. It had been debited to the vehicles account. Ignoring depreciation, you have to ignore depreciation. The examiner is asking you the effect of these. The examiner wants to know the effect of these errors on the Jaunty's profit for the year. What are the effect of these errors on Jaunty's profit for the year? That is what the examiner wants to know from you. We just have to ignore the depreciation. Okay, we have to ignore depreciation. So what we need to understand basically, students, if an expense is not recorded, we can clearly see here the expense was not recorded, so profit for the year is overstated by $1,500. Vehicle repair cost for $1,500, profit for the year is overstated because of the fact that the vehicle, this is an expense was treated as an asset, so expense was not recorded. And then the legal fees relating to the purchase of new premises has been included in the expenses. No, that is a capital expenditure. Legal fees always comes under capital expenditure. Remember, this is their testing capital revenue expenditure. Legal fees always comes in the capital expenditure. So profit for the year is understated by $2,100. So you can say $2,100 to be subtracted. Profit is understated by that. So it is going to be profit was overstated, 1,500 profit was maximum, and 2,100 profit is understated less. So 21, so it means the difference is 600. And then you can tell the examiner the difference is 600. Okay, the profit for the year is still understated by 600. I think I'll have to go with 15, option number B, that the profit is understated still by $600 because of the fact that legal fees is higher. The difference between them is $600, and legal fees should, they have counted legal fees. They have done what, students? It's an important, difficult one. Legal fees they have counted as the capital expenditure. They should legal fees they should they have counted लीगल फीस को उन्होंने एक्सपेंसेस के तौर पे कंसिडर कर लिया, रेवेन्यू एक्सपेंडिचर में कर लिया. दे शुड हैव डन इट एज अ कैपिटल एक्सपेंडिचर. ओके, सो दैट विल बी सर ऑप्शन नंबर बी. 15 is sir option number B, which is $600 understated. Okay, students, that is what we have got. The last one is question number 16, talks about which item is a revenue received. Okay, so the examiner wants which item is a revenue receipt. Revenue receipt is coming from the daily source of income, trading activities. Revenue receipt comes from trading activities. Cash invested by the owner of the business is additional capital, is capital receipt. Proceeds from the sale of a non-current asset, a book value, capital receipt. Rent received from letting part of the premises. Short-term loan received from a financing company. All of the three are basically capital receipt. Please understand, CR stands for capital receipt. CR stands for capital receipt, and capital receipt. Answer is option number C, which is 16. When you are receiving the rent, it is other incomes. Okay, receiving of the rent, 16, answer is C, because we are receiving the rent received from the letting the part of the premises. Reaching the halfway stage mark, students, we have got 16C is done. Reaching the halfway stage mark, we have a very good depreciation question. Let's have a look at that as well. Okay. So we have got question number 17, and we have got Samuel started his business on 1st January 2023, and he bought basically two delivery vans for 12,000 each. Follow very carefully. Two assets were purchased for 12,000 each. He started the business on 1st Jan 2023, depreciates all vehicles at the rate of 10% per annum, calculated monthly using straight line method. Every information is available. He sold one of the vehicles, replaced with a larger one costing $24,000. Balance on provision for depreciation at the end of 31st December 2024. So it's after 2 years they're asking. Okay, it's a huge question to be solved. Very important to understand, students. So I think we will need some space available as well to solve this one. So let's have a look at it. We'll need a complete detailed solving solution. See, some MCQs 16 was done in 5 to 10 seconds. MCQ number 16 was done in 5 to 10 seconds, but MCQ number 15 took 2 3 minutes. And similarly, 17 will also take 2 3 minutes to solve. You have to get the answer correctly. You have to understand you are dealing in 2 years, sir, which is 1st January 2023. The year will end on, sir, 31st December 2023. And you also have to understand that the next year you have to look into it, which is 1st January 2024. You are dealing for the financial year ending, which is on 31st December 2024. We are dealing in the financial year ending on 31st December 2024. So it will be the second year that we are dealing in as well. So how do you make the T account? That is important. Let's have a look at the T account. That will play a very important role in here. So I'll make a T account, which is provision for the depreciation T account, students. And here we go. The provision for depreciation is going to be, students, the provision for depreciation. It will be at the balance brought down, sir. So the balance brought down have to be calculated properly. What will be the balance brought down at 2024 on January 1st? So that will be the complete year depreciation. Whatever the previous year depreciation is, we have to calculate. Two vehicles bought for $12,000 each on 1st January, 10% rate monthly. Very simple and easy. I'll get it. I'll write it down for students working here. 24,000. Two vehicles will cost 12,000 into two will be 24,000 into 10%. That should be the balance brought down, students. That will be, sir, $2,400 because you have to calculate monthly on the straight line method. So that will be the impact here, this thing. Then the next one is that on 1st April, what happened the 1st April 20? So January, next year, January, February, March, only 3 months. The next month, only 3 months after we sold one of the vehicles and we got a larger one and replace it with a larger one costing $24,000. So here we go. The next one will be income statement value, which is the closing of the year depreciation, sir. So income statement value I'm going to calculate for students, sir, which will be December 31st of 2024. The first one will be a new asset coming in, 24,000, 10% I will charge, but for some months. A new vehicle comes in, a new vehicle depreciation comes in 24,000. It remains 10%, but because it is monthly, so I'll have to count the months. April, May, June, July, August, September, October, November, December. 9 months I have to calculate the depreciation, students. 24,000 into 10% into 9 months. That will be 9 divided by 12. That will be 24,000 into 10%. That will be one asset. That is, sir, $1,800 is one depreciation. And then I will have to get the one vehicle is still there, okay? One vehicle, the other the larger one, the one delivery vehicle is still there of $12,000. So I'm going to charge complete depreciation of that, 12,000 into 10%. And the most important thing is the one we are selling it, the one we are selling it, one of the vehicles that we are selling it, that will be also charged for 3 months. That's the main thing because it's a monthly policy. The depreciation is charged in the year of sale as well. The depreciation is charged in this year of sale as well. So one delivery vehicle that we are selling, one is completely being used. Now, out of the two delivery vehicles, one of them is completely being used. So here we go, sir. The other vehicle, 12,000 into 10%. That will be for 3 over 12 months. So that is going to be 10% into 3 over 12, which will be 300. Depreciation for this one will be charged as well. So this is three income statement depreciation will be coming in, students. We have got three income statement depreciation values for three different vehicles I have found out. And the last portion will be at the on the 1st April 2024. The asset that you are disposing, you also remove the days of that, okay? The asset If I tell you they're very sharp examiner, what they are doing, have a look at it. A complete 5 marks T account. If this question comes in paper two, it's complete 5 marks. If this question comes in paper two, it's complete 5 marks worth it. They are trying to ask you in an MCQ form which is worth only 1 mark. So that is where if you struggle with depreciation, skip this because it's taking a lot. It will take a lot of time and effort. You can come back later when the exam paper is finishing and you have time available. Do that. So better to do questions like that's the hint as well for the ending session. Case 16 MCQs like 16, MCQs like 14, 13. Do those first, which are simple, direct questions. MCQ number 9, first 30 minutes, 20 minutes, do MCQs like question number 9, 13, and all of these type of questions, you should do them first, okay? And then comes to medium or hard level working, extra working level questions. So we got disposal now, which is basically, sir, 12,000 is the cost of the asset, one of them, and I charge 10% on that depreciation, and that will be for 1 year, and then the depreciation for the 3 months as well, which will also be removed as well, sir. So that is going to be, this is the total amount, 1200 plus 300, 1500 will be the depreciation to be removed, and then whatever the balance will come down, that will be the answer. Hope it will be correct. Bismillahirrahmanirrahim. Let's check. This should be 2024 on December 31st. Date doesn't matter. Working. This is very proper, very looking good working. Okay. You don't, the working doesn't matter. Why I'm showing the proper working? Because there are marks for dates as well. So this is the objective is it's the revision of the accounting. So everything have to be done in properly way. So we have got this as subtracting 1500. 4200 is coming and 4200 I have an answer with the help of marking scheme. It is alhamdulillah correct. Okay, so 4200 is the closing balance of the depreciation. You add all of them and subtract all of the debit side, add all the credit side, that is 17 coming. There is no other way of solving it because the value, it's a numeric question, and as everyone knows, numeric is all about no elimination process can be. We can't do any elimination process in this. It's just the calculation based answer. So whatever the answer individual students get, that we will have to mark it. So we have got 4200, which is correct, and this is what we have got. So, and we have the next part to be done as well. We'll continue. We continuing question number 18 as well. So continuing with question number 18, students, what we need to understand for this February March 2025, the MCQs for paper 1 variant 2 for the IGCSE O levels accounting. So what we have basically, question number 18 says that we have got a carpenter who uses the revalue method of depreciation for the hand tools that are used in the business. So the question number 17 was also on depreciation, for which we did the whole working. And now question number 18 is also basically on the depreciation, but this is basically testing about the revaluation method. That what do we have in the revaluation method is basically that we, a carpenter is using the revaluation method of depreciation for the hand tools. So for the hand tools we are using it, and all hand tools in the use at the end of the financial year. So we have hand tools at the end of financial year, including those bought during the year, are revalued. So all of them are basically revalued. Whatever the new hand tools are bought, whatever the new assets are bought, as well as the assets that we have available in use at the end of the financial year. So the assets that are available at the end of financial year. So new hand tools were purchased during the year as well. So there were some new hand tools that were purchased as well, but there were no hand tools that were disposed of. So no disposal happened. So we have to tell the examiner which value of hand tools shows the calculation of the depreciation for the year. So in simple words or indirectly, the examiner is asking, the examiner wants students to basically find out what will be the depreciation method. Okay, what is the depreciation charge for the year for using the revaluation method? So it will always be value at the start of the year plus the new hand tools purchase less the value. So 18 should be D according to me, that it is going to be said it will be the value at the start of the year plus the new hand tools purchase and less the value at the end of the year, that will be the value of the loose tool. So that is basically, it's the formula that they are asking, that does the student, the examiner is testing basically whether the student knows the formula or not for the revaluation method. So that is basically question number 18 answer that we have got. Okay, value at the start of the year plus the new hand tools purchase less value at the end of the year. That is going to be the formula application. All other them might have some addition subtraction issue, and it must be that some of them is a wrong value giving as well, which is okay, value at the start of the year less. This is correct, but it is partial. Okay, it is not complete formula for the revaluation method. It's not the complete formula. Then we have value at the start of the year, less cost of, that is completely wrong. Okay, less word is being used. We have to understand that it should have been the added one. And similarly, this one, value at the start plus value at the end. So value at the start and value at the end is never added. The value at the start of the year and the value at the end of the year are always subtracted. So that is question number 18, answer as D, the MCQ. Moving on, then the next topic is provision for doubtful debts. We have talked about it. This is basically, we are in section number 4. So section number 1, 2, 3 and MCQs were done. Section number 4 we are in. After that, inventory valuation will come. So at the end of year 1, a trader created a provision for doubtful debts of 6%, and then she decided to increase the provision to 6%. Okay, so she started the provision with 5% of the trade receivables, and then later on she is saying that we will do at the end of year 2, we decided to increase the provision to 6%. So it's very simple. I think again, since we have space available, let's do the provision for doubtful debts account. That is what the examiner will be looking at for question number 19 as well. So what we have got is basically, always remember to read the requirement. What was the amount for the provision for, what was the amount for the provision for doubtful debts? That should be included in the income statement. So it's basically, they are trying to get whether it's an increase or the decrease. So what is the amount that will be included in the income statement for the end of year 2, the provision for doubtful debts amount. So it's very simple, sir. The opening balance will be 4,800 into 5%. Okay, so make sure calculator use is important here. So 4,800 into 5%, I got 240 as the balance brought down. So 240 as balance brought down, which is how I'm getting, students, whatever the trade receivables are at the end of year 1. So 4,800 into the 5%. Okay, so I got this as, sir, 4,800 into the 5%. That is basically 240 coming. And then the closing value will be 7,500 into 6%. At the end of year 2, the provision changes. So balance carried down is basically, okay, sir, we have got balance carried down as 7,500 into the 6%. So this is what going to be, sir. So this is basically 75 into 6%, that is 450. So we can clearly say that there is an increase in provision for doubtful debts. So income state provision for doubtful debts account will be credited. So income statement will be 450 minus 240. So it will be 210. Let's me write down the name of the account, provision for doubtful debts. So we have seen an increase. So expenses will increase by $210, which is provision for doubtful debts is income statement $210. So provision for doubtful debts that should be included in the income statement will be, that will be said $210 for question number 19, which will be debit. Okay, income statement, since it's an expense. Provision for doubtful debts account will be credited. As everyone can see, what's the journal entry that students should know? The journal entry is basically, sir, income statement will be debited. Since it's an expense, right? Income statement will be debited, sir, and provision for doubtful debts will be credit. So we have got income statement debit and provision for doubtful debts will be credited. Okay, so that is what we have got, which will be 210 and 210. That will be income statement debit and provision for doubtful debts credit. So it will be 210 debit. B answer will be the case. Question number 19 will be B, which should be matching with the marking scheme as well. It was again a it was again a numerics question. Okay, 18 was theoretical question and 19 was again a numeric question that we have to solve, sir. That it's asking from the perspective of income statement Okay, what will be the provision for doubtful debt? So it's coming as $210, but it will be debited in the income statement, and provision for doubtful debts account will be credited, students. Hope everyone got this. Then we move on to question number 20. As I said, it will come on inventory valuation, as we currently are on section number 4. So it will be that we have got, sir, the end of the year inventories. So we have got the end of year inventories held by a sports shop are shown in the table. As always, the format should be remembered, students. Always inventory is valued at the lower of cost, either cost or net realizable value, whichever is lower. So football kits, we will do it at net realizable value. Track suit, we will do at 210, and football boots, we are going to do at also the cost. Okay, track suit and football, we are going to do at basically the cost. What we got is basically repetition of the point that tracksuits will be done at 210 cost, and football boots will also be done at 160 cost, and football kits will only be done at 230. So just have to add these three values, sir, and it will be 230 plus 210 and plus 160, and that will be the answer. 230 plus 210 plus 160, that will be $600 as the answer. So here we go. 600, option number A. 20 point number A will be $600 as the value that we are going to get, students. Okay. So 20 will be a 600. I've added 230. Lower of them, whatever the lower value is, you will choose that. Okay. Then again, this was numerics. Then a theoretical question came. Now we have started section number 5, which is sole trader, partnership, manufacturing, limited companies, incomplete records. Questions will be coming on those topics now, because we have started section number 5, which is question number 21 of the IGCSE accounting exam for the February March 2025 talks about. You have to tell what will be the disadvantage. Please remember, bold things are very important. What is a disadvantage of running a business as a sole trader? So what will be the disadvantage of running the business as a sole trader? The owner does not have to pay interest on drawings. The owner is entitled to all the profits made by a business. The owner must share the decision making and the profits. The owner's personal possessions are at risk if the business should fail. That is the unlimited liability concept. That's the only disadvantage. The rest of them are not even. The owner is entitled to all the. So, this is an advantage. Everyone knows that the owner is entitled to the advantage. The owner makes all the decisions. The owner does not have to share the decision making and the profits. And the owner, this is in partnership. A and C are all related to partnership related things. Option number D will be the answer, that the owner's personal possessions are also at risk because of the fact the owner's personal possessions are at risk if the business should fail. So the owner's personal possessions are basically at the risk. Okay. So that is 21 should be the D answer, students. That is what we are going to get for question number 21, students. Then we have what is shown in the capital and the liabilities section of a statement of financial position of a business. So the examiner is asking about balance sheet now. Question number 22 is also theory. What is shown in the capital and the liabilities section? So they want you to know, okay, what is in the capital and the liabilities section of the statement of financial position. What is in that? So we have got the working capital of the business. No, working capital means current assets minus current liabilities. So it will not be 100%. B is not possible, because working capital means current assets minus current liabilities. How the resources are being used by the business? Total amounts owed by the business. So total amounts owed, where the resources of the business have come from. I think it's D answer. It's where the resources of the business have come from, because this is total amounts owed by the business are liability, but total amounts owed to the business is an asset as well. Okay. Total amounts that are owed to the business is an asset, although this one is a liability, so this one doesn't work. And then the first one, how the resources are being used, that is not what the capital and liabilities will be telling about. So I don't think A will be the perfect answer to fit in. So it will be option number D only again. So 21 was D and 22 is also D. Both of them are D answers. That it will be where the resources of the business have come from. Okay, where are the resources coming from? So some of them from the bank loan, some of them from trade payables, some of them from other payables, liabilities, capital funding. If the owner have invested additional capital, drawings and profit for the year. So this is where the resources of the business are coming from. This is where the resources of the business are basically coming from. Then after that, we come to partnership topic. Question number 23 talks about, sir, what was Ben's share of profit? Okay, so the examiner wants you to know what was the Ben's share of profit. It's a partnership question. Have to read carefully and understand. They want Ben's share of residual profit, which means we have to make students profit and loss appropriation account. Okay, we have got N and Ben are in partnership sharing profits and losses equally. Okay, we have got N and Ben. They are in partnership sharing profit and losses equally. So they are basically sharing the profit and losses equally. We have got N and the Ben partner. Profit for the year is this. You should remember the appropriation account. So let's start. We have interest on capital and some drawings as well. So it is going to be very simple that in the profit for the year that we get, sir, we just have to add interest on drawings and less interest on capital. So here we go. Interest on capital will be subtracted, and that is what we have got, students. It will be 20 minus 9,000. It will come as 11,000, and you can split it half and half between them. So it is going to be 5,500 according to me. That the split, the examiner wants the residual profit. So 5,500 is the residual profit for Ben, and it's the same for N as well. So 5,500 should be the answer, which is going to be, sir, point number A, option number A. $5,500 is the Ben residual profit. Students have to be careful here. Sometimes you have to ignore the information, and that is this question is all about. That those who will ignore drawings will be only getting the correct answer, as question number 23 will be A. It is very important to understand case sometimes you have to ignore information, you have to follow. They're asking just the residual profit. The key term here is, what's the key term, sir? It's the residual profit. And the residual profit is basically coming from the profit and loss appropriation account. The residual profit, students, so the residual profit always comes from the residual profit always comes basically from profit and loss appropriation account, in which we have to add interest on drawings and less interest on capital. Since there is no interest on drawings, or the percentage was also not given. The percentage is also not given of the interest on drawings, and there is no the percent. So it's only just no add interest on drawings and less interest on capital. Just follow the format. No salary and commission is available. So we just got the value, and then because the examiner mentioned they are sharing profit and losses equally, we just divided it. Question number 23 is also done. Then we have got Frankie is a partner. So we have got, sir, Frankie is a partner. He has both a capital account and a current account. Okay, so we have got basically partnership questions. Frankie is a partner and he got both a capital and a current account. We have to be careful what the next requirement of the question is going to come, a theoretical question coming in. Always remember it will be a balance of this. Okay, balance between numerics and theory will be there. Or two questions of theory, so two questions of numbers, numerics, one question theory, one question numeric. That is how the things will be. Which statement is correct? Because Frankie is a partner, and we have to talk about capital. Any loans he made to the partnership, any loans that are made to the partnership are added to the his capital account balance. No, not at all. Loan is a liability. Why it will be added in the capital? So it's a completely baseless thing. Option number A will be completely rejected. While reading it, I can reject it. If any loans are made, if any loans Frankie made as a partner to the partnership, it's never added in the capital account balances. He can have a debit balance on his current account, but not on his capital account. That is perfect. I think 24 should be B answer. That's 100% correct. Interest on drawing would increase a credit balance on his current account. No, it's basically a credit balance. Okay, it's basically a credit balance. The balance of his capital account falls when his The balance on his capital account falls when his drawings exceed his share of profit. No. When the drawings exceed the share of profit, I'll explain again. When the drawings exceed the share of profit, it is always the current account balance will be negative, not the capital. If the drawings exceed the share of profit, students, if the drawings are exceeding the share of profit, it will always be a debit balance on the current account, but not the capital account. Interest on drawings are, if you remember the format for current account tells us interest on drawings are always shown on the debit side of the current account. Interest on drawings will always be shown as a debit balance on the current account. C and D are rejected. Loan made to the partnership, students need to understand, is a liability because it's a loan is being made to the partnership. There will be loan to partnership. Interest on loan will be coming in the current account, and loan will be made as a separate account. It is not merged. Capital and liability are two separate things, right? So it will be a loan is generally a liability, so A will not be merged with the option number A is not possible. The capital account is always kept separate. So 24 is B answer, students. We have got question number 24 as basically the B answer. Hope everyone got this and understand. Can the current account can definitely have a debit balance because of the interest is because of that drawings are more than the earning profit. The current account can have a debit balance, it's possible, but capital account can never have a debit balance because capital is how much the money amount invested by the partners. So capital account can never have a debit balance, but the current account can have a debit balance definitely. Hope everyone is clear with all this one. Moving on to question number 25. We got basically said what is included in the equity of a limited company. So we have to tell the examiner. Now we have got two limited companies account. Okay, what is included in the equity of a limited company? So think about it and let me know, students, what is included in the equity of the limited companies. So what we have got is basically debentures are basically non-current liabilities. So debentures are not part of equity. So debentures will not be part of the equity. Goodwill is never part of equity. Pretty sure goodwill is never. Goodwill is part of non-current assets. The goodwill cannot be part of equity. Debentures are long-term liabilities, cannot be part of that. General reserve is part of equity, and ordinary share capital, retained earnings, share premium, revaluation reserve, retained earnings, all of these are part of the equity. So this will be 2 and 4 only, and that is going to be 2 and 4 only. That is question number 25, part C. Okay. So that is what we have got here, and we have got question number 25, part number C as the answer. Hope everyone got this. Understood. Question number 25 is on the company's account. Limited company, that only one question on company is tested, in which we have got the correct answer that it will be 2 and 4. General reserve and ordinary share capital are part of the equity, and apart from them, nothing else comes in the equity. Then they are testing a question on the receipts and payments account, which means club accounting question. What is shown in the receipts? So you have to remember the format. What is shown in the receipts and payments account of a music club? So what will be the shown in the receipts and payments account of a music club? So it will be a summary of all receipts and payments means money coming in and money going out of the business. Okay. Receipts and payments means money going into the business and money going out of the business. Club surplus or deficit never comes. That comes in basically income and expenditure. Depreciation also comes in income and expenditure because depreciation is a non-cash expense. I think it's a summary of all the cash and bank transactions. Subscriptions received and accrued are also subscriptions received is shown, but accrued will also never come because accrued is a adjustment related. So accrued also subscriptions received and accrued also doesn't come in receipts and payments. If it was written subscriptions received only, then I would have given the answer corrected. Subscriptions received definitely comes in, but subscriptions accrued does not come in the receipts and payments account. So it is option number A as the answer, and 26 will be A, sir. Okay. So we have solved 26 MCQs out of 35 MCQs by telling that the receipts and payments account is the summary of all the cash and bank transactions of a music club. Rest majority of them goes in the income and expenditure account. Okay, so I'll write it down as well. All the remaining three B, C, D is majority of the times going in the income and expenditure account. The surplus, deficit, the depreciation all comes under that heading. Does everyone got it? Income and expenditure, summary of all the cash and bank transactions. Everything basically goes in that. Hope everyone got this and understood. Question number 26 MCQ is also done as well. Then we have got Medway Social Club, another question related to club accounting. So we have got Medway Social Club runs a cafe for its members for the year ended 31st December. We have got the sales were 15,000 and the cost of the goods sold was 12,000. The coffee in closing inventory of coffee had been included a cost value of 1,000 but had deteriorated and was worth now $500. What was the profit? What profit on the cafe should be transferred to the income and expenditure account? What profit from the cafe should be done? So I think we just have to make a cafe club that we have got, sir, $15,000 as the revenue. Do we have the cost of goods sold is $12,000? So this should be question number 27. We just have to make an adjustment that inventory is valued high at $1,000. We have to make it inventory at 500. So that will be, we can say that it should be 12,000. The cost of sales we have got, sir, should be changed from 12,000. So we can have the cost of sales as basically minus 500 as 11,500. So that is going to be, sorry, plus 500 we have to do that because the closing inventory is overstated. So if I have to reduce it, the profit should be that thing. So 12,000 into 500, that will be 12,500 as the cost of sales. If we are going to subtract that, then that will be able to get the profit on the cafe, which will be 13,000. Yeah, 2,500 is the profit on the cafe. It should be option number B for 27. Hope everyone got it that the revenue is already given, students. Please understand the revenue, the sales or the revenue was already given, and we just had to basically talk about the cost of goods sold was 12,000, but we just have to do an adjustment for the inventory, which was worth $1,000. So we remove the inventory of 1,000 minus 1,000 and add plus five. We just have to make the adjustment of $500 of the inventory because of the fact that the inventory is wrongly classified, wrongly valued. The inventory is wrongly valued, and that is why we just have to add back in it so that the profit should does not be overstated. 15,000 minus 12,500 will be 2,500 as the, we have got this. Okay, it will be as the cost of the sales 12,500, and profit on the cafe will be, students, very simple to get, that will be 2,500 as the profit on the cafe. So that is question MCQ number 27th also done, that we have got here, students. Next, incomplete, sorry, the club accounting finishes, the non-for-profit organization club accounting finishes, and we have got basically the manufacturing MCQs, which is which statement about work in progress is correct. Okay, so we have to tell the examiner which statement about work in progress is correct. Basically, they are looking for the definition of it. Okay, for question number 28. Please have a look at all these MCQs that we have done on this page number 24, 25, 26, 27. And if anyone have a doubt, please let me know. So what we need to understand that MCQ number 28 will be, it consists of completed, it consists of completed and partly completed goods. No, if it was completed goods, it's called a finished goods. Okay, if it was completed goods, it will be called a finished goods. Okay, so we need to understand if it was completed goods, it will be called a finished goods. Okay, if it is adjusted for when calculating prime cost, no, work in progress is never adjusted in the prime cost. Work in progress is never adjusted in the prime cost, student, because prime cost is direct materials, direct labors, and direct expenses. Okay, and then this one, it is included as inventory in the statement of financial position. Yes, definitely. It is included as an inventory. We have three types of inventory, which is inventory of the raw materials, sir, inventory of work in progress, and inventory of the finished goods. It is included in the manufacturing account and income statement. Partially correct. It is only included in the manufacturing account. It is never. No, I already mentioned that loan can be asset as well, but not in this case. If you are giving a loan, for example, the partner was giving loan to the partnership, right? So if the partner is giving loan to the partnership, then for him it will be an asset that he will get it back. Okay, the money will be received back. So in that case, loan to a partnership can be an asset as well. If you are receiving a loan from some person, loan from a person, that will be a liability, but loan to a person, loan to someone third party, that will be always be an asset. Okay, so work in progress, got the answer right? Understood your question? Correct, got it. So loan definitely can be an asset as well if you are giving the loan to someone. You got the point, right? Clear? Understood? Any question, any issues? Everyone got this right? Then we have got 28 should be C answer, that it is included as inventory in the statement of financial position because inventory of raw materials, work in progress, and finished goods is shown. Why option number D is not the answer? Because work in progress never comes in the income statement. Work in progress never comes in income statement. Work in progress never comes in prime cost. And if it is completed goods, it means it is finished goods. Inventory of the finished goods, it will be called. So question number 28 is basically, students, as we can see, yes, borrowing is liability and lending is an asset. Yeah, we can say that. Okay, that borrowing is a liability and lending will be an asset. Okay, got that point clear? Understood? Borrowing will be a liability, but lending will be an asset if you are doing that. Okay. Moving on to MCQ number 29, six more MCQs to go. So what we have, students, is basically a manufacturer a manufacturer was there. Again, it's basically from the we call it from the manufacturing account that we have got. Uh, in what case capital can be debited? So capital can be debited when the capital is decreasing, or capital increase on the credit side and capital decrease on the debit side. So it's in the case of the, we can say that capital will be debited when you are capital is debited. I'll look into that one, because capital is usually there are not much many transactions which capital can be debited, but it's when the capital decreases. So you can say when you make a loss for the year, right? So loss for the year, that's another example, because loss for the year will, in that case, loss for the year helps to understand. Like, but loss for the year is goes in the income statement. Loss for the year debited and income statement debited, and loss for the year will be credited somehow in that case. So we'll have to look into that, which transaction. If you're looking for an example, we can work on that as well. Okay. So we got a manufacturer calculated. A manufacturer is basically calculate the cost of production for the year at $57,000. It was found that lighting and heating of $2,000 had been omitted from the financial statements. So we can tell the examiner here that basically it was found that lighting and the heating of $2,000 had been omitted from the books of financial statements. Manufacturer calculated the cost of production for the year at 57,000. 75% of lighting and heating is to be allocated to the factory, and 25% will be that. Okay, what was the correct cost of production? So it's just that out of 2000, you just have to charge 75% to the factory, and in that way, it will be the cost of production will basically increase. Okay, so 2000 into 75%, that will be $1,500, and then you can add in that 57,000, so it should be 58,500 as the cost of production. That will be increased. 29 should be D. That is what we have got, is basically 58,500. Okay, so that will be question number 29 part D, that out of 2075 that was omitted is part of the factory cost of production. So just have to calculate 2000 into 75% and put that back in the cost of production. Add that in the cost of production to get to the new value. Okay. That will help us get to the new value as well. Understood? Clear on that, Falling? I'll do all of these. Okay. We can discuss all of them in a while. Let's finish the all the MCQs this one, and then we can do talk about all the whatever queries or problems you have. We can discuss that. Okay. Moving on to question number 29. Question number 29 is done, which is on the manufacturing accounting. We just have to calculate the new cost of production, correct one, which means it is basically a incomplete records question, and students need to understand basically we have got all sales were made on cash basis, and then all goods are purchased on credit terms. So all goods, so no money is going out when you are buying the goods. When your trade payables are you are paying when you are buying the goods from trade payables, no money is going out, and all the sales were made on a cash basis. So when you are selling the inventory, so cash is coming in, the money is coming in because you are selling only on cash basis. So here we go. We have got basically Farid compared his assets and the liabilities at the start and the end of the financial year. So he is comparing that. What we have is basically the opening debit balance. We have got basically, sir, the opening debit balance of the bank. So we can just do it in that way. $4,200 was the positive debit balance. If you increase the non-current assets, think from this perspective, sir. If we increase the non-current assets, money is going out. Okay, so money is going out. So if the money is going out, I'll write down minus sign here because the money is going out. So 4,200 will subtract 11,000 because if the non-current assets are increasing, which means you are making the payment. And if the inventory got decreased, it means that money is coming in the business, because when you are selling the inventory cash basis directly, you have to add $6,100 in that. Similarly, you have to add $6,100 in that. If the trade payables are increasing, which means there's also a positive thing. Exactly. If the trade payables are increasing, it's also a positive thing because you don't have to pay back to your trade payables. You don't have to pay back to your trade payables on the current date. On the current time, you don't have to pay back your trade payables. So that's also added up as a positive because you buy on credit. So trade payables are increasing. You don't have to pay them. You don't have to pay them now. So if you do this, positive 4,200 minus 11,000, 4,200 minus 11,000 plus 6,100 and plus 3,000. So I got basically 2,300. So we got 2,300 positive, 2,300 debit. But the examiner is saying that it have led to an overdraft of 7,100. Okay. It led to an overdraft of 7,100. So this will be 4,200 minus 11,000, 4,200 minus 11,000, and I got this as 6,100 plus 3,000, that is 2,300 debit. And then the final thing was an overdraft of 7,100. So it means that how much was decreased. You can try all the values. Now you can try all the values as well and make it and have to make it the overdraft of $7,100. Understanding, students? People getting it clear? Okay. So that will be, okay, we will have to get it to 7,100 should be the credit side credit value. It should become an overdraft of $7,100 credit, which should be, so already we were on positive, but something the capital got reduced. The capital got reduced, and now we are the closing balance is 7,100 credit. So you try each and every amount, and you will realize the amount that fits in is 9,400. That if you decrease this 2,300, something the capital got decreased by 9,400. If you subtract 2,300 minus 9,400, it will give you the answer of 7,100 credit. So that is why it will be B answer, that the capital got decreased by $9,400. I tried each and every value and that's why I got the answer for 30 as MCQ option number B as the correct answer for question number 30, that the answer will be B for that the decrease will be for $9,400. Hope everyone got this question number 30, that the decrease will be, sir, for $9,400. Okay. Then it will be, any questions, any doubts, anyone, please make sure to ask right now. I repeat again that if the money was saved, we added it. Okay. So what does OD stands for? We got 6,100 as the added up, 3,000 to be added as well, and 11,000 to be subtracted. And then we got to overdraft is basically bank overdraft is basically a liability. Now, it's a liability when you have withdrawn more expenses. Bank overdraft is basically a liability when you have withdrawn more expenses than the money coming in the business. That is basically bank overdraft. What we have got is basically positive 2,300, but the examiner says that the final balance is 7,100 credit, which tells us that some of things, the capital got decreased by a certain amount, which make the positive balance negative balance. Okay. 31 is also part of ratios. Now moving on to section number 6, we can say this is the overdraft. We don't provide overdraft to others. Okay, we don't provide overdraft to others, so it's not possible to provide overdraft to others. So a business provided the following information. We have got revenue and we have got the gross profit. The examiner wants to ask what is the percentage markup. So how do I apply markup is basically the formula that I have. That markup is going to be C 1 plus R is equals to 1 plus R percent is equals to S. That's how I apply markup, where T stands for cost of sales and S stands for revenue. So cost of sales is going to be, the cost of sales is going to be 100,000 minus the 20,000, and that is going to be 80,000 as the cost of sales. Okay, so 80,000 is the cost of sales, and I can do that 80,000 times of 1 plus R percent to the is equals to the revenue 100,000, and the value will be coming 100,000. Just solve this. 100,000 divided by 80,000 and 1 minus whatever the answer comes, 1.25 minus 1 into 100, it will be 25%. 31 should be B. It's coming, my answer is coming as 25% of the markup. We have got 31 answer as B, sir, which is 25% of the markup percentage for this question. This can be counted as an incomplete records question as well, students. We can count as incomplete, and we can also count it as basically the ratios question as well, which is section number 6. 1 plus R percent is 100,000 divided by 80,000. My formula always helps everywhere. And then R percentage will be, we got 1.25 minus 1 multiply by 100, and that will be 25% as the answer coming for question number 30. Hope everyone got MCQ number 31 as well, which is basically for the February March 25 paper, MCQs paper. Then we got 32, that on the ratios, definitely why might a trader wish to increase his trade payables turnover? Okay, so we have to basically do, okay, why might a trader wish to increase his trade payables turnover days? So what do we mean by trade payables turnover days? That is what we need to understand. Okay, if we have to get trade payables turnover days, trade payable turnover days means that how much time, if you can delay the payments to your suppliers. Trade payables turnover means how many days the business takes to pay back to the suppliers. So it is basically, okay, why the trader will wish to increase his trade payables turnover days, so that he can to receive more cash discounts, to improve his total working capital. That is correct. To keep funds available for other use. Okay, and to improve working capital doesn't get improved. Working capital, so it will decrease if the trade payables turnover gets increased. Okay, so you cannot get more cash discounts if you are delaying payments to your suppliers, and this will be the opposite as well. The working capital doesn't improve. Working capital improves when you get payments, when you get the receipts from your customers quickly. When you receive money from the customers quickly, that is when the working capital gets improved. So working capital will not improve in this way. So it will be option number 32 will be two only. That will be the yeah, 32 will be only the C answer. That is two only to keep funds available for other purpose, for emergency purpose or some other expenditure. That is the only reason why you can be able to increase your trade payables turnover. Otherwise, in this case, there is no option. Okay, you don't get benefit of extra discounts from cash discounts. The only way you can get benefit from cash discounts is if you make the payment early, student. Okay, and then we have got Uzuma, the person started the provided the following information, his her first year of trading. So there's a person for MCQ number 32, 33 have got a first year of trading, and we have got sales, gross profit, advertising, other expenses, and profit for the year. Uzuma wants to improve her profit in the future and is definitely considering four options. So another important hard level question or difficult question. I'll also mark this as well. Okay, this one is also important question. Okay, so MCQ number 30 is very important. Okay, how do you get that Farid did not keep a full setup? So this one is difficult and important. Uzuma wants to improve her profit in the future. So how she can improve her profit in the future? Currently, profit is $7,800, and she is considering four options. So which option would you have to do all the options and then you will be able to get it. Which option would provide the biggest increase in her profit for the year? You start earning commission, which would increase profit for the year by 20%. So let's do it. If she starts increasing earning commission and the profit should increase by 20%, so that according to this, the profit will increase by $9,360. The profit from 7,800, what would the biggest increase in our profit will be? So I think we just need to get the biggest increase in the profits. I'll just do the difference of it. The profit will increase by 1560. Okay. Option number A, the profit will increase by the amount 1560. If you increase advertising by $1,000, it would increase gross profit by 2500. So let's do that. So if the gross profit got increased by 2500 and advertising also increased by 1000, so that will 2500 added. The net impact is 1500. So profit will increase by $1,500. Just have to get the net impact. So option number B will be the net impact will be the profit will increase by $1,500. The final profit also will increase by 1500. Increase the sales margin, increase the sales price. This would increase the gross margin. This would increase the gross margin by $2,000. So $2,000 will the profit for the year will increase by $2,000 here. Reducing other expenses by 1500 and earning commission. So this will be, if you reduce expenses, your profit will increase. So the maximum profit will increase by option number D, which is if you are reducing the expenses, that will also increase the profit. And if you earn commission, that is earning commission will be sir other income. Earning the commission will be sir other income. And if you are reducing other expenses, that will also increase profit by 1500. So total impact, the net impact will be 1500 plus 1000. That will be $2,500, sir. So option number D will help us increase the maximum possible margin for the profit of question number 33. So that is what we have got. MCQ number 33 will be that we have increased we will have to do this. It will earning commission of $1,000 and reducing other expenses by $1,500. Both of them will help net impact increase and it will help us get better at this question solving as well for option number D. Okay. Then I think this one also comes under the ratio one. Okay, if you wanted to increase our margin, and then we have got 34 and 35 accordingly on the it should be on the accounting concepts. They haven't tested, I think, on the accounting concepts this time. So 34 will be which action will improve the working capital of the business. Everyone should know working capital is basically current assets minus the current liabilities. Working capital of the business is current assets minus current liabilities. We have got basically, sir, the question says that Sally's business has reached its bank overdraft. Sally's business has reached its bank overdraft limit of $1,500. Sally is considering the following option, asking the bank to increase the overdraft limit to $2,000, borrowing $2,000 from a limit and paying the money back in 6 months, obtaining a loan of $2,000 from the bank repayable in 2 years, paying $2,000 from Sally's personal bank account into the business bank account, which action will improve the working capital of the business. So it will be current assets and current liabilities. So if you are bringing in additional capital, it always helps. So if you are paying $2,000 from Sally's personal bank into the business bank account, it means that you are bringing in additional capital. Paying $2,000 from Sally's personal bank, it means you are bringing in more capital. This will help you easily finish the overdraft, right? Overdraft limit was 1500. She have already reached it. Overdraft limit is already reached. So paying $2,000 from Sally, this is definitely going to improve working capital because money is coming in, cash inflow is injected, so assets will go up. Okay, we have to improve the working capital. Assets will go up and liability will be cleared. The bank overdraft liability will be cleared. The bank overdraft liability goes down, and asset goes up. If you are obtaining a loan which is from the bank and which is repayable in 2 years. So I don't think that should be, no, that will also, the obtaining a loan that is going to improve the working. See, I'll explain you how option number three will improve the liquid working capital or liquidity. Always remember, if you are borrowing a loan, so money will come in the business. You went to the bank and bought the loan of $2,000 from the bank, and this also it will help you get the overdraft limit finished, the bank overdraft. So again, liability goes down and $2,000 is injected by the bank, is money flow inflows in the bank. Sorry, if cash inflow comes in the business. So it will be, if you are obtaining a loan which will have to be repaid a bit later, that will also improve the, I know non-current, देखिए, non-current liability is definite, loan is definitely a non-current liability. Loan is definitely a non-current liability, but if you are getting a loan from the bank, it means that the bank is lending you money, $2,000. That is money coming in the business. So it will be current assets will increase and current liabilities will go down because you can now pay your overdraft limit. Now you can pay bank overdraft. So again, liquidity, working capital will improve, although non-current liabilities are also increasing. The working capital will improve or working capital will increase, although non-current liabilities is increasing. But at the end of the day, it is helping you improve your working capital. If you are borrowing from the relative and paying the money back in 6 months, so it doesn't help because you have to pay him back 6 months, so it doesn't improve working capital very quickly. And asking the bank, so that is also, there's basically increasing your liability, so that will definitely not help. Okay, if you are asking the bank to increase your overdraft facility, if you ask bank to increase your overdraft facility, that is not going to help. It will be the it is not going to help. It will only going to worsen the case because your current liability is going to increase. Okay, so 1 and 2 are not possible. It's only 3 and 4. 34 should be D answer, which is option number 3, and D will improve the working capital or the liquidity position. The last MCQ, which is question number 35 to complete the whole February March 2025 paper, is when does a business, there is one accounting concept being tested. When does a business recognize the income from a sale of the goods on credit? So it's a straightforward. The examiner is trying to test you whether the student knows the realization concept of the accounting concept, whether the student knows it or not. The realization concept tells us when does a business will recognize, basically the relation tells us when the goods are delivered to the customer, then only you are going to record the sale. The income from the sale can only be recorded when the goods are delivered to the customer, then only you can, when the goods are delivered to the customer, you can then only record this much, the income from the sale of the goods. When the goods are ordered by the customer, never you can do in that phase because that's an order placement only. When a check received is paid into business bank account, no, that is a payment method of that. When a check is received from the customer in payment for the goods, no. The accounting concept says that realization you can do it When the goods are delivered to the customer, you can record the income from the sale of goods on credit. So 35 will be C. With this, students, we have covered the whole February March 2025 paper. Please revise the paper. The PDF will be available to you. Make sure to revise it. See what mistakes you have done. What we need to understand is basically, according to this one, in the paper number 1 2, the MCQs paper, out of 35 marks, if you have got more than 28 MCQs, if you have got more than 28, if you have got 28 or more than 28 MCQs correct, which is 28, 29, 30, 31. So if you have got 7 MCQs wrong as well, if you have got 7 MCQs, sorry, if you have got 7 MCQs wrong as well, it's still you can score an A in that individual component of paper 1, MCQs paper 1. 28 marks were needed to get an A grade, which means 7 MCQs you could have got it wrong in this paper and still got the correct A or A star. So please double check, revise your mistakes.